Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to take a look at some of the questions that you guys have asked under this specific video post. Now, this video that was recorded, I was trying to talk about the critical differences in filing requirement for foreign-owned U.S. single-member LLCs and regular corporations. Okay, so the video helps you to understand the implications of not reporting in previous years, and it also helps you to discover some practical steps for you to rectify any past filing oversight or avoid any penalties as it relates to foreign-owned single-member LLCs pro forma 1120 and 5472. Now, before we start up, let me throw a word of caution out there that this video is for educational purposes only. It is not meant to be a legal or tax advice. And if at any point in time you need a legal or tax advice, you should always consult with a competent attorney or a CPA who can help you out. So if you haven't actually watched this video, maybe look at the title here, searching in YouTube, and then watch the entire video and you understand what this video is about. Now, some questions have come up as people get to watch this video. Some questions have come up in the comment section, and I want to try and do my best to answer some of them. Now, the first question that we will take from here is the current date right now is June 7, 2024. Okay, June 7, 2024. Now, this person says that he formed his LLC in December 2023. He was not aware of the 5472, and he's asking whether he should file now or file it in 2025. Now, let's go to the basic of why you need to file 5472. Pro forma 1120 and 5472 is used by single member LLCs, foreign-owned single member LLCs, to report related party transactions. And when we talk about related party transactions, in this case, this LLC or this person said his LLC was formed in December 2023. Now, that means that he's asking this question currently as of June 7, 2024. This forms, if you form your LLC in December 2023, it is assumed that your calendar year ends on December 31st, 2023, and so the IRS gives you 4 months, 15 days to file this return, which is April 15. Okay, so April 15, 2024 should have been when you file this return. So you don't wait till June 7 to ask whether you need to file this return. You should have filed this return back in April 15, 2024. Okay, now, assuming you were not able to file it in April 15, 2024, and you had an extension, the extension takes you all the way to October 15, 2024. So if you do not have any extension and you've missed the April 15 deadline, then the return is late. So if you ask me to file it now, yes, you should file it. It does not matter whether the return is late or not. As long as there's a filing requirement, you need to file it. And you usually in the first year when the LLC is formed, the monies that come out of your pocket or the funds that comes out of your personal pocket, personal bank account to fund or to open the LLC is a contribution to the LLC, and it's seen as a reportable transaction. So in the first year of forming your LLC, you really cannot escape this 5472. Okay, so even if you're late, you should file it now. So if you're asking this question as of June 7, 2024, and the return was due on April 15, 2024, yes, you should still file it even though it's late. You do not wait till 2025 to file. In 2025, you're going to file any reportable transactions that took place in the tax year 2024. And your tax year for 2024 will start from January 1, 2024 to December 31st, 2024. And so those activities that happens within this period will be filed in 2025. Again, take note of the deadline. It's going to be For 2024 tax year, your deadline is going to be April 15, 2025. Okay. All right. So we take a look at this question here, and then someone is asking, what should be done if a Delaware LLC starts making effectively connected income? Now, what needs to be done? Well, first of all, I assume that this is a single member LLC. So we're staying within a single member LLC discussion. If you have a single member LLC formed in Delaware or formed in any other state, in the other videos that I have made, I have explained some compliance requirement that needs to be done for Delaware LLCs. And you should find that video and check it out. It's called the Common Compliance Checklist for Delaware LLCs, as you can see on your screen. Okay, so you should watch that video and figure out what compliance issues that you have. Okay, so I'm going to summarize what that video says. Now, that video says that if you're a foreign-owned single-member LLC, the first thing you need to do is to make sure that you're renewing your LLC with the state. So in Delaware, for instance, LLCs needs to be renewed on or before June 1, and you need to pay the LLC annual franchise fee, okay, or annual report fee, whatever they call it in Delaware. Now, you also need to pay your registered agent, which is very important, because if your registered agent does not receive their payment and they resign, they can cause your LLC to be in a default mode, or it could cause your LLC to be administratively dissolved. Okay, so you need to make sure that you're also, whatever contract you've signed with the registered agent is being taken care of. Third one is you need to make sure that you're filing the pro forma 1120 and the 5472, assuming or as long as you have reportable transactions within the specific tax year. Okay, now those are the three tax compliance checklists I talk about in the video that I just talked about. The next complexity that this person commenting is adding to this discussion is effectively connected income. Now, if you're a foreign-owned U.S. single-member LLC and you have effectively connected income, okay, the single-member LLC is a disregarded entity. So if you have an effectively connected income, the owner of the LLC. So if the owner of the LLC is a person, that owner is going to take that effectively connected income and report it on the U.S. tax return 1040 NR for non-resident. If that owner of the LLC is a foreign corporation, that foreign corporation is going to pick up that effectively connected income and report it on 1120F. Okay, now, if you're from a treaty country, if you're from a country that has a tax treaty with the U.S., even though you'll be required to report to file Form 1040 NR, you may still be able to use one of those treaty provisions. You know, usually it's in Article 7, business profit, to override this effectively connected income, as long as you can prove that you do not have permanent establishment in the U.S. Okay, so permanent establishment could be offices or warehouses or having employees on the ground working for you, and there's a whole bunch of it. But I have a video that talks about when a foreign person is considered to be doing business in the U.S., and you should be able to go into that YouTube video and watch it and understand the concept of doing business in the U.S., understand the concept of effectively connected income, and then the concept of permanent establishment. Okay, so as long as if you start making effectively connected income, yes, if you're an individual that owns an LLC, you need to report those effectively connected income on Form 1040 NR for non-resident. And if you do not have a tax ID, you should apply for an ITIN at the same time as filing your return. Okay, so if you don't know how to go about this, we are always here helping people, helping taxpayers from all over the world. Number one, to apply for ITIN and to be able to file their tax return correctly. Okay. Secondly, if you are a foreign corporation that owns a U.S. LLC and you're making effectively connected income, you report it on 1120F. Okay, and that before you as a foreign corporation files any taxes in the US on 1120F, you need to call the IRS to get an EIN for your foreign corporation. So there's a process in doing that. You can basically search or Google it, how a foreign corporation can get EIN to file their tax returns. Okay, now once again, let me just talk about effectively connected income and those that come from a treaty country. If you come from a treaty country, yes, you may have an effectively connected income, but as long as you can prove that you do not have permanent establishment, then you may be able to use the treaty to protect that income from being taxed in the US. Okay, but you still need to file the 1040 NR and declare the treaty provisions that you're trying to use to offset the income that you're about to pay taxes on. So I hope this helps out with these two questions. The first questions we dealt with was someone asking whether to file a late return now or wait till next year. And then this question about what happens when a Delaware LLC, and it's not just only a Delaware LLC. If any LLC that you formed in the US start making effectively connected income, please go back and replay my explanation on what you need to do when you have effectively connected income. So I hope this helps you guys out, and if it does, please click like, subscribe, share.